It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Hey everybody, it's Tyrone Jackson, the wealthy investor of thewealthyinvestor.net, and it's time for the Trading Stocks Made Easy podcast. Here we are, episode 249. I got a lot of things to talk to you about. If you have an online trading account or brokerage account, this episode is for you. If you are getting to know the wealthy investor philosophy, this episode is for you. And if you get inspired from listening to the Trading Stocks Made Easy podcast, this episode is for you. And I ask that you share it with someone you love. Let's talk today more about wealth than trades, okay? So I wind up trumpeting the same themes here at the Trading Stocks Made Easy podcast. My goal is always to make stock market investing and trading simple. Because if you're going to make a lot of money trading stocks, we know the simple approach works, right? All right. So today I'm going to talk to you about the big money that's going to be earned in 2025. So some people say, how can you tell what the current trends are? Well, first of all, I've been a stock market trader and investor for over 22 years. Anything you do consistently for over 22 years, you're going to get good at it. And this is one of the reasons I love explaining the market to you so that you can benefit from the trends that are coming in the market. But I've developed this expertise over time. Now, right before I talk about the trends that are coming up, I want to talk about some of the guys who are teaching stock market trading on YouTube. Nothing wrong with most of the people who are teaching you how to trade on YouTube. But I want to emphasize one thing. Trading and let's say making $5,000 or $2,500 a trade, that is great. That happens to all of us. But that is not how you get rich. You get richer in the stock market by holding companies because shares are assets. If you choose the right companies, then those assets appreciate in value, almost like a house. And at some point, you can sell those assets to support your lifestyle, pay off your house, buy a new car, towards college. I've talked about all these topics in prior episodes, okay? So, learning how to trade is a great way to make money, but it has absolutely nothing to do with financial freedom. And I just feel compelled to make that distinction because that's the way it is. In other words, if you owned Microsoft shares for 20 years and you had a $100,000 investment 20 years ago, that investment today is worth $5 million. You would actually have wealth out of that, right? Particularly if you sold those shares. But most people are fixated with trading, which is short term. And I teach trading and I love to trade just like everybody else. But today's episode is all about wealth. So let me sort of kind of break down the last 4 decades in the stock market to give you some context and perspective as to what's going to make sense and what's going to help you build wealth in 2025. There was a time in the stock market where investors, people like you and I, became wealthy owning oil stocks because oil was the popular commodity of the day. So if you purchase certain oil companies at, let's say, $19, $20 a share, and 5 years later, those same shares were worth $300, and you didn't do anything but hold on to the shares or buy more, as we say in the Wealthy Investor program, you built a position, you would have wealth in a 2 to 5 year period. Well, when that trend was over, the next trend was banking, because when banks went public, they were able to take that money from the public market, lend it out, adjust their lending standards, and they had more money to lend to usually the rich, right? When the banking trend was over, the next big trend that hit the stock market was all about computers. Right? Who had a computer? Who was manufacturing computers? And we went from industries that ran an entire industry on computers, and then the trend changed to what? software. So it wasn't enough to have a computer. It was all about the software that ran the computer. Then we went through an era where personal computers hit the marketplace. So it wasn't just about what kind of computer IBM was running to crunch numbers. It became about a computer in every household. And then we had another trend was about, the software that ran those computers. Then the internet came in. Then it was about browsers. Then it was about who had the best browsers. And then it was about ads. Okay? So the world moves on and the stock market reflects changing times. Does that make sense? Because it should. So what we're investing in every era changes. Now, here's the funny thing about an era. No one sounds an alarm that says, hey, by the way, we're in a brand new era right now, and it's not about computing. As of today at 2:45, a new era began. That's why you have to study the stock market and publicly traded markets in general, because you'll see big institutions are always investing in the next big thing. Right now in 2024, they keep telling us the next big thing is AI, right? AI, this advanced software that's going to run the world. Well, yes and no. No one's been able to monetize AI, but we do see some evidence that it's going to be a useful tool in the future. What I am seeing right now, and I'm going to share it with you and just tell you for 2025, that we're entering a retail bonanza. Okay? So not too long ago, we had an election in the United States of America in which we chose a brand new president. I am not here to be political. I am here to let you know where the money is. So regardless of what you feel about the new president, I'm talking about trends today. The new president in the United States is very pro-business, very pro-alternative forms of currency, like cryptocurrency, and is going to shape policy around business doing very well and stocks in the publicly traded market. Well, we know, according to the United States government, less than 10% of all Americans own stocks directly. If the census is correct and there are about 350 million people in the United States, less than 35 million people cash in on ownership in the stock market. So that means, in effect, the rich will get richer regardless of what trend is in place. Do you see a pattern here? If you're middle class and you don't own Apple or Microsoft or members of the Dow Jones Industrial Average or the S&P 500, there's less of a likelihood that you will have financial freedom. Now, I'm not just telling you this because I'm the stock market guy and millions of people listen to me. Wishful thinking. I'm not telling you that. This is just matter of trend and facts. Right? So when the stock market begins to rise, the average person is not participating in the stocks because they don't own stocks directly. But you and I, focused on wealth building, if we don't get too distracted by trading, we have tremendous wealth opportunities. Why? Not only can we buy shares in popular companies for ourselves, we can do it for our kids, our grandkids, nieces, and nephews. And by doing so, we will be creating generational wealth. Okay? So from oil to banking to computer to software to AI to retail. What is going on right now? What are the trends that I'm actually seeing? And I'll talk to you about that right after you take a listen to this.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
So we're talking about stocks and trends that I actually like. So here's what I think. as long as you are buying shares in companies in the S&P and are members of the Dow Jones Industrial Average, you'll do well. But there's a retail trend that's going on. You'll notice there are less malls in America than ever before. Why? Amazon has changed that. Amazon is the largest retailer in the world, and without getting into how they generate all of their revenue, some of the things that you are buying in the Amazon marketplace were not created by Amazon, but you can open up a store there and you can sell things on their platform, provided that you like their rules and their structure, right? This change introduced by Amazon, and by the way, remember Amazon started out selling books, right? Now they sell everything. Okay, they're ubiquitous in that sense. Okay, well, all of this buying on Amazon, an unintended consequence, has caused retail, actual stores in your local neighborhood, to disappear because we are now used to the prices that we can get for an item that we desire or love on Amazon. We are even willing to wait 3 to 5 days for that item to show up if we get it at the price that we like. So that's why you're not seeing as many retailers. I'm sure you know that. And all that's left in your local neighborhood are what they call in the retail sector big box stores. So this is why you're seeing Target, and this is why you're seeing Best Buy, who we thought was done a decade ago, but they've managed to adapt Amazon's business model, and you can now go into a Best Buy and leave with the item, which was not a big deal. But the saying was, 7 years ago when I was trading, we used to say that Best Buy is Amazon's showroom, because you would go into Best Buy, look at the item, and you'd wind up buying it on Amazon. Then Best Buy said, hey, why can't we compete with Amazon on price? And we'll sell these items the same price, a little bit more, but you can leave immediately. Here's the trend that's going on in retail that's going to be big in 2025. It's not only buying the item, but the fact that you can actually have someone else go and pick up the item, and all you have to do is, they call it today, curbside pickup. Turns out that consumers really like shopping online, but then they will go get the items and they're already paid for. But when they go get the items, many retailers are charging you a fee to have the items ready for you. Now, this is really important, and I'll show you how this all ties together. If a company says, hey, we'll deliver this service for you, but it's $59 to have one of our salespeople in the store basically become your personal shopper, middle class patrons of the store go, I'll pay the $59. Well, that $59 is generating billions and billions and billions and billions and billions of dollars that never existed before for retailers like Costco. So this idea that you go shopping for me, I'll just drive by and pick up all the items, that's generating billions and billions of dollars, not only for Costco, but also for Walmart. Now, today, I spent at least an hour researching Walmart because in the last quarter, their gross profits, that top line revenue I'm always talking to you about, was $169 billion in a quarter that's outside of the fourth quarter. That is to say, outside of Christmas shopping. Now, Disney generated $20 billion in the same quarter. Oracle came up with about $62 billion, and I can't find any other company that made $169 billion in that last quarter. So I was saying to my assistant today, this is very odd that we can't find a software company to match the revenues that we have in Walmart. We also saw robust revenues in Costco, which were released this morning, and their revenues were very good, but they did not match Walmart. Now, here's what's fascinating if you geek out on the technical. Walmart is less than $90 a share. It does have a float of $4.3 billion and a decent dividend, but no one in the publicly traded market seemed to be generating the kind of revenue that they're generating except who? Amazon. If Wall Street is to follow revenue here, there's one clear winner, which is Walmart. even with the 4.3 billion in the float size, that stock looks like it's going to go up 50 to 100% per year if the current trend continues. That means Walmart shares will probably outperform on a percentage basis Microsoft and Apple for sure, right? So you can see just by doing a little bit of this very, very light analysis what the winning stocks are going to be based on retail trends. Now, when I do this kind of forecasting, I don't do it to necessarily be right. I do it to be a good stock picker. Because if Walmart is trading at, let's say, $100 a share, a 20% move on an annual basis takes the stock up to $120. And for those of you who like to follow my trades, you know there's always WI Trade School. Start a membership there. I always say it's like Netflix for stock market traders because you can go back 7 years and look at my picks, right? So that's the reason that I really love WI Trade School, because I'm not always right, but I'm very close to it. Why? Because I'm betting on the trend and then taking the leader in the retail sector and going a 20% move looks like this. Well, for those of you who like following my options trades, listen to this. If I can get a 20% movement in Walmart stock and I own 30 contracts of a Delta 50 leaps that's 2 years away, that's a lot of money off a $20 move in the stock. And that's what I don't think a lot of people get. There's cover call writing, which for us is an income generating tool. There's also owning shares, and then there's trading options against a member of the Dow. If you put those together and you look at some of your favorite stocks, and some of your favorite stocks have a 15 to 20% move over the next 52 weeks, do you realize how much money we're talking about in the options? And that's a trade that hedge funds do all the time. The only difference is they're deeper in the money than a Delta 50. And that contributes, when they're correct, that contributes to the traders who trade for the fund getting a $30 million bonus if your fund is big enough, because you're not off in some $7 stock matching a leaps with shares. You're off in a member of the Dow Jones Industrial Average and the S&P. Now, if you think about it, indexing, starting an index fund that mirrors the Dow or the S&P has become more popular because it's more conservative than owning the shares themselves. The advantage that you and I have is we can own indexes and we can simultaneously own shares and in-the-money leaps on certain Dow and S&P components. So just think about this, because I get criticized with all this wealth talk. If you really want to participate in the markets, you can own shares and indexes and or ETFs that mimic the S&P and the Dow, and certain ETFs that mimic tech stocks, et cetera, et cetera. So this doesn't require you, after a while, to be brilliant at picking stocks. Indexes and ETFs around shares that you own, the most conservative way to participate directly in the stock market and can earn you millions in the next 2 to 5 years. So really, it's not just about stock picking, it's how you back up your stock choices indexing. That's amazing. And that's what most people won't tell you in the stock market. And that's what most people won't tell you on YouTube. Why? Because the methodology I just described to you, that creates wealth, hands down. And if you think I'm wrong and you disagree with me, I have no problem with that. But take a look at the SPY over the last 5 years. Take a look at the QQQs, the NASDAQ weighted ETF. Just pull up a chart. Imagine if you owned the stocks like Apple, Microsoft, and a couple of your other favorite Dow components, and you also own the index. You're going to be rich. You're going to be richer than you are now, and you're certainly going to be richer than just having your money in a mutual fund. So if I'm right on this new retail trend that's created here in the United States, and I pick certain stocks and I own shares of my favorite ETF or index fund, what is going to happen in the next 2 to 5 years? I am richer almost by default because the money to be made indexing is financed by covered calls. Thank you very much. You've been a great audience. Gang, this is not that hard after a while. Wealth requires patience, but once you get your account to $1 million and you're getting a 2 to 5% return from covered calls, you're making $25,000 to $50,000 a month for the rest of your life, provided the market doesn't have a major crash, right? That means that you have an income stream that is permanent. It is permanent. So for those of you who actually listen to me, you're going to find that even if I'm not right about every stock, I am right about the trend. And that is a lot to be excited about. Don't try to be a genius in 2025. Follow the stocks that you like, but follow the trend and retail. And you'll be fine. Why? Because it's simple. And that's what the Trading Stocks Made Easy podcast is all about. Not only saying, hey, let's be friends, join the Wealthy Investor Program, start your membership at WI Trade School, but take the quarterly courses that I teach. Because I don't like things being complicated. I like them being very simple. And most importantly, during the courses, you could talk back to me. Hopefully not bad. Don't talk back bad. But at least we can have a line of communication. To do well, building wealth in the stock market, you're going to need a mentor, someone whose approach to the market you like and who you identify with. And I am happy to be that mentor to the thousands of people who actually join the program, start growing their IRAs, start buying stocks for their kids and their families. And I love that. To me, it's all an act of service. And I have some people to talk to on a regular basis. One of my friends said to me before I became the wealthy investor, you need to go out and talk to people because you just talk about this stock market stuff all the time. They didn't know that I would find you and you would find me. Hey, this is our last podcast of 2024. I'm wishing you all the best to you and your family. And 2025, if you stick with me, will be your best year for wealth building ever. Why? Because now you have some orientation as to what the trend will be. This is Tyrone Jackson for thewealthyinvestor.net saying I'll see you in the new year when the new trend goes into full effect. All the best to you.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.